Listening to Today, I'm Paul James, sitting in for Ben Liang with Xu Qingdou. Time now for our business report, and joining me on the desk is Zhao Yang.
Well, thank you, Paul. Let's check out some of the key events on the corporate front in China and around the world this week. Joining me on the line is Jeffrey Towson, professor of investment at Peking University Guanghua School of Management. So the first story of this week is Tencent announced a 15% of acquisition of e-commerce company Jingdong, and it is a fairly big and important change in the e-commerce space and comes before the upcoming IPOs of Alibaba and Jingdong. So, Professor Towson, what is the impact of this on Jingdong versus their primary competitor Alibaba? Is this a game changer, or as some have claimed?
Right. I think this is a pretty big deal. And generally speaking, it's not great news for Alibaba. Jingdong is number 2 in e-commerce, but I mean they're way behind Alibaba. Alibaba dominates in the B2C space, sort of business to consumers. Alibaba's got 50% of the market. Jingdong's more like 18%, and that doesn't even include the sort of consumer to consumer, which Alibaba dominates. What's interesting about this deal, and I think why it's gotten so much attention, is Alibaba arguably is weak in sort of 2 places in e-commerce, mobile versus PC use and logistics. And this deal, Jingdong and Tencent, that's exactly where these groups are very, very strong. So, I sort of reframe this deal as, look, this is really between WeChat and Jingdong's logistics network. That's really the deal. And that's a pretty big deal because Alibaba is not really very strong in either of those.
And so will this impact Alibaba's IPO, or what about Jingdong's upcoming IPO?
Right. For Alibaba, I mean, it's hard to imagine anything that will impact the IPO. This is a very big train moving very quickly. Everyone's very excited about it. It's arguably going to be the largest IPO in the world this year. So, it would be hard to impact that particular story. And also, it's not a huge deal financially. It's about a $215 million acquisition. So, relative to Alibaba's size, this is not big. Now, Jingdong is another story. Their IPO is supposed to be in the $1 to $2 billion range. A partnership with a giant like Tencent does change the story, and it could move the needle in terms of valuation. I think certainly Jingdong's current shareholders are probably pretty happy about all of this. And the thing that cuts across all of this, why everyone talks about this, is the real big prize is e-commerce in China. That's the $200 billion gorilla. And right now there's really only 2 ways to get at that as your investor, and one's Alibaba and the other's Jingdong.
And so Jingdong, you mentioned it's good at logistics, but how big a factor in this is logistics, or is it mostly about the shift to mobile?
Right. Logistics is something people talk about because companies like Alibaba, which have these amazing economics because it's an online e-commerce site, but they're very dependent on getting the product to people. And Alibaba, by and large, has sort of been depending on China's infrastructure, which is a bit shaky in that regard. Jingdong, in contrast, controls its supply chain all the way from product to putting it in the hands of the customer. That's their strength. So they have that. So everyone knows logistics is a big part of this, even though the economics are not terribly attractive. But, Alibaba has announced that they're going to invest up to $16 billion in infrastructure over the next 7 years. So it's a big deal. Now, my argument is, this is ultimately, business, you always live and die with the customer. And the customers have been on PCs, and now they're going to be on mobile. So whoever has that, that's who's really in charge here.
And another story, business story of the past week was that the default of Shanghai Chaorui Solar Energy, which makes it the first Chinese company to default on its corporate debt. Analysts have confirmed the company has failed to make a required $15 million interest payment on a $164 million bond. So how important or surprising is this? Well, it is not the first Chinese company to be unable to pay its debt obligations. It is the first time that a local or other government bailout hasn't come, right?
Right. I mean, that's sort of the headline for this story. It's the first sort of onshore corporate bond to default. Now, certainly, there are a lot of companies in trouble, and there have been companies in trouble in the past that are, and especially now, I mean, there's so much debt that has been used in the last several years, in particular in solar. So that's not unusual. What's unusual is the government basically didn't step in and let them default. It's really not that big of a step, which I think is why it's interesting. It doesn't take a lot for the government to step in or another group to step in. You don't have to bail them out. You just have to sort of get everyone to agree, look, we'll postpone the payments for a while. But even that was declined, and the company is defaulted, and it's the first one.
Yeah, but should we expect more corporate debt defaults?
I think, yeah, you're definitely going to see this. Governments of various types, they don't really typically care if one company defaults or not. I mean, it's one company, unless that company's quite large. In this case, it's a fairly small solar company. What governments tend to care about is this going to have a wider effect? Will it hurt GDP growth across, say, a region? Will it rattle the financial markets? Will it cause a credit crunch? It's those sort of bigger, implications. Now, in this case, I don't think any of those things were anticipated. This was a small company, and the markets, by and large, haven't moved. So I think there will be more of these, but I think they'll be selective, and whether or not the government jumps in will be based on that idea of, is this have wider implications? And if it doesn't, I think there will be sort of a selective, let's let them sort of work themselves out.
Well, the final story is a surprising fall in exports was announced for February here in China. The Customs Administration said shipments abroad dropped 18% from a year early. This made news globally and had lots of economists digging into the data. So mostly trying to figure out if this is real. So Professor Towson, so what do you think? What does it mean? And what are the deep-rooted reasons for it? Some say it's because during the Spring Festival holiday, people here in China are not working. But is that a typical reason or the only reason for that?
Right. I think this is one of those stories where it kind of tells you as much about the people watching the numbers as the actual numbers. This idea that exports have fallen 18% played into some fears that people have, which is maybe GDP is slowing, GDP growth, especially those who are sort of bearish on China GDP for one reason or another. Now, when you look at the numbers, it turns out these numbers are probably not what everyone says they are. If you look at, these are year-over-year numbers, so it's an 18% drop from February of last year. But if you look at February of last year, there was a real big spike in the export numbers. A lot of that data looks like it's not true. So the numbers, I'm not a real believer in the numbers. I don't think exports are dropping precipitously. There's a chance that they're slowing gradually, maybe a little bit down. But, when you look at these huge macro numbers and you're looking for short-term changes in macro numbers, I generally don't worry about that unless it relates to debt, because that can be worrisome. So it doesn't look like it's a real thing. It looks like it's mostly sort of data artifact.
Okay.
But people are worried about GDP slowing, so that's kind of why I think got a lot of attention.
Okay, thank you. That is Jeffrey Towson, Professor of Investment at Peking University.